Hello, ladies and gentlemen. My name is Greg McGlosky from ForexLive.com. Today's date is October 27, 2022. This is the morning Forex report. Just had ECB raise rates by 75 basis points as expected. However, there is a little bit of a dovish tilt to it. The euro versus US dollar fell below the parity level, but it has rebounded back above that level as the press conference is getting underway. US durable goods came in mixed, maybe a little bit weaker when you consider all the nuances of the different pieces of it. We saw initial claims come in fairly steady at 217 versus 220,000 expected. The US GDP came in at 2.6% versus 2.4%, with the core PCE price coming in at as expected at 4.5%. So that's the data dump here today. Let's talk about the technicals. We'll start with the euro versus US dollar. I've got it on the 4-hour chart here to get a broader view of this, and as you can see, the high price that we moved up to yesterday and into the early Asian session here today went up to test the overlay 100-day moving average. That's this blue line here, the step line here. That level comes in at 1.0098, and the high price today I think was just above that level. So we rotated just a little bit above that level and then rotated back to the downside here. The price fell below the parity level, which was also the high price going back to this date on October 4th, and the low price reached down to the 0.9984 level before bouncing back to the upside. We're currently trading at par 15 as we speak. On the downside, we'll be watching the 52 level. That's a 50% retracement of this move to the downside. It is also near, if I go back to the daily chart, the 52 level is also near the low price going back to this day right here. This is the July 14th day, and that low came in at 0.99515. That is right near the 50% retracement level right through here. So key level on the downside for the euro versus US dollar is that level right there. Note here that in the month of September, the price tried to hold that 99.51 level 1, 2, 3, 4 trading days before it rotating back to the downside, and that led to our move to the low for the year at 0.9535. So with Lagarde speaking right now, and the price is now back toward the parity level at 1.0004. The breaking below that level and staying below that level would have traders looking toward the 51-ish type level on the downside. On the top side, the 100-day moving average was clearly the resistance target on the top side that would need to be broken if the buyers are to take more control in the euro versus US dollar. Let's take a look at the dollar versus yen. We saw a rotation to the downside continue in the Asian and into the late Asian, early European session, moved down to this swing area through here and went through that level and then held above the other swing area down through here in the 61.8% retracement of this move up from the low going all the way back to September 22nd. That 61 comes in at 144.769. We're seeing a pretty nice, fairly steady rotation back to the upside here. Remember, the fundamentals are more in favor of the US dollar versus the Japanese yen from a central bank perspective. However, the technicals could lead the way, and what we saw in trading here this week was the technicals leading the way. We had this volatility from Bank of Japan intervention and so on and so forth that to push the price down to this swing area through here, but then we rotated back to the upside. We moved a little bit above the 100 bar moving average here, but not here. The sellers leaned against that level, and then we came down below the 200-hour moving average, admittedly right here and right here. But note here that the low prices here were stalling against a 200-hour moving average. So buyers are trying to stay in control, trying to push the price to the upside through here. That was not the case. The decision was made to move lower instead, and that paved the way for the rotation to the downside in the dollar versus yen. Technicals would have to lead the way for the dollar versus yen to go lower, at least at the beginning of this of a potential change in the cycle of this currency pair. But we are seeing the rebound back to the upside here today as more of the fundamentals take control again. It would take a move back below the 50% retracement at 146.138 and this swing area, I guess, through here to give the bears a little bit more control and a little bit more comfort, or the sellers more control and more comfort. But as long as the price can remain above this level, the intraday bias is probably still to the upside. Watch the 38.2% retracement, the broken 38.2% retracement. It also was this low through here. That was the low from Tuesday's trade. So that's a look at the dollar versus yen. Let's take a look at the sterling versus US dollar. And again, I'm going to take a look at the 4-hour chart to get a broader view of this. We saw the market move continue its move to the upside here in trading today. And in the process, we moved above this swing area through here. It was over a week or so of trading where the price found some support and then resistance and resistance again, and tried to move above it here up to the swing area through here, but fell short and then broke below that level. And when the price broke back below that level, this area right through here held resistance, and it started its move to the downside here that culminated in the pound versus US dollar nearly getting to the parity level within 350 basis points or pips is pretty good for that currency pair before the rotation strong rotation back to the upside here for this currency pair. We were able to get above this level right here where we had a number of swing levels coming through here, all these levels through here, swing type levels in between the 114.59 and 114.95 level. On the downside, that would be if this pair should start to go back to the downside here, that area right here, this yellow area right here, would be key support and a key technical level that traders would want to see the price hold if it's going to continue its move to the upside. If we go back below that level, that would be more bearish. So this area right here is going to be our support target on the downside. On the top side, the next key level is the 117.48 level. That's the 100-day moving average right here. We would need to get above that level. So right now we are in between support down here and resistance up here. We have the interim barometer, if you will, right through here between 115.98 and 116.20 on the top side. Once again, we would try to go above that level, and trading here today, but could not sustain the momentum. So there you have it, a look at some of the major currency pairs. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.